Hey everyone, it's Katusa here. Here's a very special guest, the industry veteran in the nuclear and uranium space, my good friend Scott. And we're basically doing this 1 year recap, Scott, because we did a video last year and I looked at it and a lot of well-known names in the business were saying, oh, Marin, your thesis on AI and nuclear and the Silicon Valley is going to get into this. They thought it was a pie in the sky. I wasn't bullish enough. Not only is Meta, Google, Alphabet, all of them are getting behind this, Amazon, but you have companies like Microsoft signing deals to bring back 3 Mile past producing reactors that were shut down to in the future and at prices of 50% higher than the going spot price for electricity.
Yeah.
So this is it doesn't matter who wins the political bet. It doesn't matter if you're left or right. The one thing we can guarantee is that the AI, with the future of AI, is going to require more electricity per rack of computation. In some cases, 20, 30, up to 100 times, if you look at some of the new NVIDIA chips, per rack of electricity. And you base load key power. And this is the only commodity. It doesn't matter if you mainstream media or if you're, on X with Elon Musk. Nuclear now is a go. You had the Sierra Club just today announce in the first time in 50 years, you know, they are the brain trust of Greenpeace saying nuclear is a go. Italy, nuclear is a go. Japan, the EU, you got Silicon Valley, which is the mainstream media is going to control that narrative, needs it. So you know it's going to be positive. What else do you see here we've been waiting for this for 20 years, Scott. This is the perfect setup.
Yeah, no, as if the uranium investment thesis needed more catalysts. We got this data center AI boost, which is, I think it's historic in nature. I think it changes everything in the uranium industry. This isn't the industry in the past that was kind of the producers selling to utilities and that sort of old game of how uranium's bought and sold. You're going to have companies where the only thing standing between these Amazon, Googles, Oracles of the world and multi-trillion dollar market caps are their ability to generate electricity to run the data centers to power AI. And all of these companies are going to existing nuclear and new nuclear, including small modular and advanced reactors. All of them require uranium. And these guys aren't going to fool around and play the old game of how uranium is bought and sold. And so I think there's a dynamic shift in the uranium market. I mean, listen, tech companies are disruptors. That's what they do. They've come to the nuclear energy industry and disrupted us, but for the better. Like I think
Yeah.
with them, we wouldn't achieve this goal that the COP28 set out to triple nuclear power by 2050. That was kind of an aspirational goal set out in Dubai at those meetings. We're already on track to double nuclear power generation. So suddenly that goal is not so aspirational, and the industry is taking real steps to make that happen.
So the narrative shift, we all agree, doesn't matter if left and right, it's it's green light for nuclear. But the key, the fundamental shift has always been this thesis, the rise of America. These American companies are not going to allow the Putin angle, the dependency on Kazakhstan for the uranium. They're going to want to secure a stable, long-term source of uranium. And let's look at Scott, you, Amir, the team. These are not Johnny come latelys to the uranium sector because it's now sexy and Silicon Valley's in it. You've been in it your whole life. And I remember a decade ago when nobody wanted to touch uranium, post Fukushima, when Uranium Royalty did its first IPO, coming up to 5 years this December. You look at the situation and the deals that you've signed, your management team with the kind of brother company, Uranium Energy Corp, has 500 million pounds of 43101. For those that don't understand, that means that's a regulatory approved pounds in the ground. Zero of those are in any jurisdictions that are anti-uranium. These are all producing centers. 12.1 million pounds of permitted facilities in the US. And what I want everyone to understand is Uranium Royalty Corp, as I call it, UROY, is listed on the NASDAQ. That's the big league exchanges. That's the leagues that Silicon Valley are listed on. And when you look at the biggest royalty and streaming company in the world for resources for mining, it was Silver Wheaton. That was spun out of, at the time, the largest gold company in the world called Gold Corp. Today it's called Newmont. And you look at what Uranium Royal is doing, it's trading under its P to NAV, where its peers like a Franco-Nevada or Silver Wheaton are trading 2 to 3, even 3.5 times P to NAV, and you're trading less than NAV. That's the published NAV. That's not Katusa Research's NAV. That's not Scott Melby's NAV. Those are the big banks in the US, in Canada that publish their own independent research. You have north of 225 million in actual physical uranium above ground, and that's appreciating, and your costs are, you're sitting at north of 50% gains on that. No debt. What is next for this company? Because you were first, you positioned it, and it's still cheap. So what's next?
Well, I mean, in the resource sector, cyclicality of the commodity is inevitable, and it's how companies and management teams embrace the cycles. And with Amir and UEC, it was embracing the down cycle to acquire all the assets at 10 cents on the dollar and permit them, license them, de-risk them, and get them to a point where that now UEC is the fastest growing uranium company in the world. URC was built on the same principle. We launched in December of 2019, which was still coming out of one of the worst bear cycles in commodity history. But it was a wonderful time to launch. We were able to fill our initial portfolio of royalties, all at acquisition prices at 0.3 NAV and below. That's really discounted acquisitions. Now, all of those royalty assets, none of them were producing because there weren't many producers in the West that were producing uranium in the depressed uranium market. Well, now in 2024, our portfolio is beginning to crystallize. It's beginning to see our mines in our basket of assets get back into production and ramp up, like Cigar Lake and McArthur River, not only ramping up, but talking about going beyond the 18 million pound production levels, maybe as high as 24 million pounds of annual production.
And give some color for the person that is coming to nuclear as a new investor. Cigar Lake, McArthur River, these aren't just permitted built mines. These are the highest grade, largest producers of its kind in the world. And we have interests on that. And we bought it when nobody wanted it.
Exactly. I mean, these are the world's richest, highest grade mines. These are ore grades 100 times the world average. Production levels that are currently targeted at 18 million pounds a year each. These are phenomenal Saskatchewan Athabasca assets. We were able to acquire interests on those mines from an oil and gas company that was active in the 1970s and 80s in the basin, retained a royalty all these years. We came in and bought it. So, now we're beginning to see, we're obviously getting cash flow from McArthur River in the form of physical uranium to our account at Cameco's facility. And Cigar Lake will kick in at a net profit interest in the next 2 to 3 years. But between those two facilities, we could be cash flowing $5 to $6 million a year just from those mines. We also have interest in Langer Heinrich, which is a world-class mine in Namibia that has produced several million pounds through the years to now be restarting, and we'll begin to see cash coming from that. We've got interest in the Lance mine of Peninsula in northeastern Wyoming. The theme here is that our portfolio is beginning to get back into production and cash flow, and many of the mines in our 22 royalty interests on 19 projects are beginning to now come into focus. Rough Rider is now owned by UEC. We have a 2% NSR on Rough Rider, which could be 6-7 million pound a year producer in a few years. And we have a 2% gross value interest on what's produced there. We also are excited about the pipeline. I mean, think of all the billions of dollars of capital that are going to need to be invested to get the next generation of uranium mines off the ground around the world. We're a capital provider. We're competing with debt and equity, with royalties and streams to fund that next generation of mines. And I can tell you, we're very active in Australia, Africa, US, and Canada on a really healthy pipeline of projects to generate new deals that go into our portfolio and grow that asset base.
Now, just to give some perspective on this, you look at Cigar, MacArthur, those are the holy grails of Cameco, the largest Western producer. You mentioned Rough Rider, and we have a 2% NSR Uroy has on that deposit. And it just 14 years ago, that was in a hostile battle between Rio Tinto and Cameco. A lot of people are focusing on these other deposits, but that was the one Cameco wanted to, and it was a back and forth hostile for over 555, or going back 14 years. And I remember always going on TV, talking, explaining about it. But Rio Tinto ultimately won that, advanced it, and now people, you, Royce, got this. And I remember when you announced it, again, it was at a time when no one wanted it. That's the key here. And more importantly, if there is a future downturn, this team has been able to take advantage of that situation. I personally don't think we're going to see that in the next few years because that the obvious need for nuclear is here now. That negative shadow, Silicon Valley, it doesn't matter which side, even governments are going to push it. You look at even older technologies are being reanalyzed to see how they can optimize. The world needs nuclear energy, and this portfolio you built, a lot of people don't remember how valuable that Rough Rider deposit was, and two of the largest uranium producer in the world and the largest mining company in the world were going at it for that deposit.
$600 million they Rio Tinto spent on it, invested another 100 to 200 million. Now UEC has it, and we're very excited to see the results of their economic study, which will come out by the end of the year, which will give the market a good indication of what it is that UEC has there. And it's a 70 million pound deposit at 3 to 4% ore grades.
Very high grade. Yeah.
That would put it on par with, stuff that, Fission has on the other side of the basin, but maybe a faster development timeline. And that's serious cash flow that can materialize within the next 6 years. The pipeline too couldn't be more full right now. We're looking at projects that need to be brought on in Africa, Australia, Canada, and we're there present with those management teams, with the CFO saying, what do you need? What do you need to get into production? Is it 30, 40, 50, $100 million to get into production? We want to be part of your capital stack. And they're very welcoming of this, that we're not an uncaring bank or financial institution. We're a true partner in their success, and so we're getting a really warm reception with companies, miners, developers around the world.
And because of having the UEC angle, the management team's involvement in the nuclear, and something the sector's just starting to realize, it's a very small sector, relatively speaking. And when we used to go, I remember in 2015, you and I were there in France at the World Nuclear Fuels Market when I gave the keynote talk. There's maybe 60 people in the post conference. Everyone knows each other. It's not like oil and gas where you have millions of employees. So you look at this, and at the ultimately, you ask Warren Buffett's thesis of a moat. Uroy has a moat. If you took $250 million today, you could not just buy the physical uranium today. You just couldn't buy it. It's just not available. You probably couldn't buy it for $300 to $400 million in the time frame instant, which the Silicon Valley companies want to secure. So for the market cap of the company, you could not replace the physical uranium that has already been paid for. There's no debt. It's there sitting in storage. Then you look at the 20 interests like on Cameco, MacArthur, Cigar, Rough Rider, all these assets, Peninsula's assets. You look around the deals you cut, you could not cut that in a 24-month time frame for $100 million. So you look at to me, your intrinsic value and the advantage. Where do you see the next 12 months for shareholders to profit from what I see as the first inning of the real boom in uranium?
Yeah, well, I think you saw all the uranium equities pull back at the beginning of 2024, which was frustrating because the fundamentals have been building and couldn't be more positive. But you did see the uranium price go from 106 back down to 78, 79, which is still a pretty good level. but it really hit the equities hard. And I think, Uroy pulled back in that as well. So I know a number of both retail and institutional investors did the math and they said, wait a minute, you're 2.7 million pounds of U3O8 in the drum at Cameco, where the utilities need to buy it, is worth almost as much as your current market cap. And that was just a flashing green light signal to load up. And you're beginning to see that. I think in the last month, we're up 30% in 30 days. And I think, we're obviously riding the wave of what we're doing in the company, but it's also this incredibly positive narrative around nuclear. For management, it's to grow the portfolio. That's job number one for me, is to add new deals into the mix. Obviously, do the due diligence, pay the right price, don't overpay for assets. But I can tell you we're very active on that front.
You look at passive capital management, which is now over 55% of the US market, and people talk about these ETFs. The nuclear and uranium stories are just getting into it. It's only a few of these companies. And something I want people to understand is Uroy's right at that point where it's going to enter these passive ETFs, and buying becomes buying and more buying. And as more capital passively gets applied to these ETFs, that in alone is going to start increasing significantly in the years to come, because this isn't an exploration company that needs to wait 7 years to permit. This fallacy that it's going to become easier to permit these mines is absolutely wrong. It doesn't matter where you are in the world. Even though the narrative is positive, you still have to go through the environmental and government and stakeholder process within the jurisdiction.
Yep.
You don't take those risks. That's this huge advantage that Uroy has, and the passive capital is going to start creating this tsunami of buying in the years to come. And the nuclear sector hasn't really seen that. There's maybe one or two companies that have benefited from it, and it's because of the size and the liquidity. But when you look at Uroy's cash balance, its net asset value, and more importantly, its revenue that is coming, and that's going to now enter other ETFs within 5 years, just with the existing portfolio using current prices, you're looking somewhere between 25 to 30 million in cash flow.
Yep, absolutely. Listen, we're in the big uranium and ETFs of URA and URNM, but I think whether it's green energy transition or AI and tech funds, I mean, there's an opportunity to be in a growing number of these passive ETF type investments. And the investment itself has elements of the ETF. It's diversified. We have 22 interests in 19 projects. That's really appealing to a lot of investors that don't want to pick the one or two companies in the space they think are going to soar. So yeah, it's the right model in the right commodity at the right point in this cycle. So couldn't be more excited for the future, and not the we're talking the near term future. This is really, we're in a supply squeeze that I
Real
think
time. Yeah.
no one really fully grasps yet. They see the spot market kind of struggling to get back up above $100, but I think when we get utility demand hitting in the market, in the spot market, because the long term available supplies of mine production is largely locked up under contract, we're very quickly getting to that point. There's no other choice than to go to the spot market to pay whatever the market will bear for uranium. And we have new entrants. The new entrants are coming in and they don't have the benefit of having a fuel team around for the last 30 years. They're going to have to go in and I think make investments in mines to assure, just like GM made investments, in lithium mines. I think that it's coming in uranium very quickly, but those are signs of a commodity in a very severe squeeze in the coming months and years.
So Scott, when I published my first book, The Colder War, and the chapter on, the reality of this nuclear, and to us, it was such an obvious situation. People just assume that Kazakhstan is going to produce cheap, and I want everyone to truly understand that paradigm has shifted, and I want it. Maybe people are tired of hearing me talk about it for 15 years, But let's talk about how their costs are going to significantly increase. The low-hanging fruit, the easy pounds have been produced. And then the Russia and China angle are creeping in that we've talked about. I want the people to hear from Scott what he sees from the Kazakh production, and more importantly, where are those pounds going to be going?
Yeah. Well, I have the benefit of having worked for the Russians in Kazakhstan and the Kazakhs in Kazakhstan, and they are struggling to even, not produce at increased levels just to meet their license nominal capacities, and they're struggling with acid availability, supply chain, workforce, and now, increased taxation. So the industry really hangs on production guidance out of Kazatomprom. And I understand it. They're 40% of global production. But whether they produce 55, 65, or 75 million pounds a year really is not going to matter in the coming years if China and Russia are fully consuming all the uranium production from the world's largest producer. And we're rapidly getting to that point. Russia has, had close to 50% of Kazakh production, and then they made this sort of sole source acquisition of Budnoskoye, the largest new deposit under development in Kazakhstan. That's all going to Russia. None of it's going to the West through, in the past would have come through Uranium One into Western utilities. So the Russians have more than half of the production tied up. The Chinese, sharing the other border and the fastest growing nuclear power program in the world, are quickly consolidating the other half through direct joint venture ownership, massive contracts, which right this week, I think Kazatomprom shareholders are voting on a deal to supply uranium to China National Nuclear that's larger than 50% of the value of the company. I mean, it's some unbelievable figure. We haven't seen the number. We just know the value is large enough for shareholders to vote on it. They're quickly tying up the other half of production. And I think Kazatomprom reported that in recent sales figures, already 85% of their sales are going to Russia and China. So I don't know if there's an analogy in oil and gas or commodities where the world's largest producer is not available to the West. So we have to have assets developed in Australia, Canada, the United States, parts of Africa that aren't under Chinese and Russian control. So, the world is in a structural deficit of uranium. But if you break it up and between the BRICS and the non-BRICS countries, I think the West is probably in a more severe shortage than the East is. Good news for China and Russia is they get Kazakhstan. Now, the good news for us, we do get Canada and the United States, and both these countries are underutilized in terms of their uranium resources. And so I see enormous growth in those two regions. I see Australia benefiting, and I said parts of Africa, but we're seeing, even in Niger, where you've seen the military coup and they kicked out the United States and France.
Yep.
And who moves in as the new military protector of the military government is Wagner Group out of
Yep.
Russia, not anyone else. And I realize there's still companies that are kind of trying to make a go of it there, but the Chinese and Russians are going to be very quick to pounce on anything that's available in
And
Africa.
we've talked about this in verbatim, and here's the best part. It's if you just do the numbers, you can see that 85% of Kazakh production in the next few years is going to start rolling to Russia and China. There's no way the West could even compete. It's not just about prices. The Chinese can do deals at a state level that the West utilities legally cannot even do with other things like loans and infrastructure loans and projects and offtakes and like all sorts of things that the West can't even do. More importantly, look at Cameco's interest over the last 15 years on projects they've invested when it started at 70-30. And I wrote about this 10 years ago, and now it's reverted where it's 30-70. That's the old Soviet way. And here's the best part. You can go to these areas and take this crazy risk, which I don't feel you need to. Scott, you and your team have already done this years ago. Interest in Cameco, Cigar Lake, McArthur River. You got Rough Rider. You've got all of the permitted near-term producers in the U.S. You have your fingers and assets already in the portfolio. The ones that are going to be real-time in areas where there is production, like in Namibia, you have already cut those deals at a price when uranium was $25 a pound, not 83 like today.
Right.
So for me, why take the risk when you could not build this today for double the price? So just like my thesis was on Uranium Energy Corp, which is one of the best performing uranium stocks in the world, I think the next leg to really run is Uranium Royalty Corp, listed on the NASDAQ. I'm a full believer. I was there day one. Scott, I was standing beside your son when we're ringing the bell in the New York Times Square at the NASDAQ. This is around you, Amir, the team, and I couldn't be more prouder to be part of something because you went out there and you did what you said you were going to do during a time when no one believed you. It was such a horrible uranium market, but we believed, we financed, we pulled it through, and the best days are ahead because the world has now sees what we talked about 5 and 10 years ago. So I'm very excited moving forward. Do you have anything else to leave my audience with?
Listen, great mining companies are defined by what they do in the depths of the down cycles, in the bear market cycles. It's the decisions and the investments they make then that defines them when the commodities in a bull market, and it's too late then to plant seeds. It's harvest time, and I feel that URC really grasped that that concept at really at the tail end of the worst commodity market we've seen in decades, and built this company. And again, I think it's providing the perfect platform in a commodity that is going to see historic heights in terms of uranium prices and development of uranium resources going forward. So again, appreciate your confidence in us and the management teams and our shareholders that are viewing this. Is you've had to persevere as well. You've had to be a bit contrarian, and if you got in early, you're now getting your rewards. If you're just coming into the stock, it's not too late. This is a second inning of a 9 inning game, and there's a lot of appreciation to come in the months and years ahead.
So my existing audience knows how much I believe in you and your team. For the new audience, everything starts with the people. Great people will make great things happen. Average management team will just screw things up. The Uranium Royalty Corps, UROY on the NASDAQ, this management team has been here for over 20 years. Scott's been there and done it, and you get a whole career of knowledge and experience and network. So hopefully you leave going, wow, when you look at an investment, look at the people, look at their record, and specifically what Scott said. When nobody wanted uranium, what were they doing? And what did they build for the future? And that's why I think this company's greatly positioned to reward shareholders in the coming years. Scott, thank you so much for doing this.
Great. Thank you, Mayor.